review of the Smart Money Concept Indicator. I'm going to bang this out. It's over 1,300 lines of code in this. It does take a while to load up, but let's just go through the settings here. So, this is what it's going to look like out of the box. Okay, so what we've got here is the order blocks. Okay, swing order blocks these are. When we break out the toolbar, you can see these order blocks, which is the swing to here, swing down, touch the order block, swing down, new order block, and we're here. So these little ones in here are internal order blocks, that's why they're a lighter grey, and the swing order blocks are darker grey, and the same with the downside but blue. So when I go into the settings, okay, you're going to have the mode at the top, which is historical or present, and the historical just basically loads up everything. You can style coloured or monochrome comes from the coloured candles. So if we was to select the coloured candles here, we're going to see this type of change. And how this works is, okay, is the change of character. So you see this cooch, this change of character, the candle's broken up and then, done its thing sideways for a bit. That's probably not the best example. A better one would probably be down here. Let me see if I can locate this. Yeah, so down here you can see the change of character on an internal basis. It's come down, tried to retest, moved higher, retested the area and moved up. There'd be some order blocks down here, internal ones. So what's happened is moved up, come down, retested, and then shut off up, and it's moved up. It's just a smart money theory, so it's just all built into this. Let's just turn this off. Okay, so the internal structure and the swing structure is the dotted line. You can see the dotted line there, change of character, and then the solid line is the swing change of character, and it's the same for the BOS, the break of structures. I can't see any on this particular chart here. Oh, there's one. So little break of structure there. Dash line for internal structure and solid lines for swing structures. Colours can be changed on them, and also you can just remove them for just, say, all break of structures or all change of characters or both. The confluence filter can be put on for extra confluence. Swing points can be changed. I've just set that to 21, and then I've put this show the high and low basically, because as you're trading, you want to know where the the local low is in case of a liquidity sweep or a break, and this is the base for these particular change of characters and break of structures and so on. So as I'm trading, we might come down here and make a low, and immediately I've just marked that off like so for a local low, and then look at these particular highs and when that breaks. So this is broken. Usually I'm just moving this to here so I can see this basic range here, and this gives you that low. We're in a move down here, therefore this is just automatically put on, and so in there you can see the strong high up the top there. Okay, so if we go into the settings here again, you can see the swing order blocks have been taken off and the internal ones left. So this can be just changed for different time frames, etc., whatever you're looking at, or whatever your style of trading is. So we've got the equal highs and lows because this is one of the entry kind of patterns that I'm using. This equal highs, equal lows, double tops, double bottoms, and you can see here a perfect one just before the move down here. So we've got this move up, bearish engulfing, we come back up, form a double top, start to move down, and we break the character and so on. So the equal highs and lows, the bar confirmation and the threshold is pretty much as close as I can get to what I'm using. I'm not looking for an exact double top or candle bodies or wicks or anything like that. It's a near enough approximation. So fair value gaps, you can see these red boxes here, fair value gaps. You can adjust this to put only clean fair value gaps, so this will delete quite a Oh no, actually I'm looking at the BPR. Okay, cool. So this actually moves in for the BPR. Balance price range. This is kind of where imbalances lie. Double fair value gaps. So we've got a tiny one. If I just zoom in here, you can see a little fair value gap on the left hand candle, and then a little fair value gap on the right hand side of the candle, and you can see this neon pink box extended, and that's very they're very powerful areas, man. So I've gone over this previously, but if I just move this, delete the previous BPRs, and we just start to have a look at the the price range. We've got one here that hasn't even been tested. Why has it been deleted? Okay. Ah, yes, yes. So we've got a gap on the left-hand side, gap on the right-hand side, and then we've moved up into this order block, and then very quickly had a move down back into this. And as we've done that, we've formed another BPR above it, and prices come back up into it before moving down. So we've got one knocking about here up at 23,350, another one there. Well, we've got another one here as well, so up at 24. But as you can see, look, BPR here moved up, come back down right into that area here. So as we've had this move down, we've come back up, met the BPR. So in balance range, if I turn these initial balance range, this is more for profile traders, volume traders. So this can be set to a different session time or whatever time you're looking to monitor. So in this particular case, I've just had the first hour of the UK open session, and you can see here 7 a.m. and we've got this candle ranged off again here and again here. So the point is when you're understanding the different theories behind this type of strategies. I mean, you can see here there's an imbalance there. There's the initial range. We've had a move down, come up, pushed out, and here the range at support, we break, and that's that. There's a few different time frames. Let's just say call them the time ranges that you can work with for different instruments. And so for Europe, 8 a.m. till 9 a.m. The US indices, 9:30 till 10:30. That's Eastern time. We've got crude oil, which is 9 a.m. till 10 a.m. Again, ET, and gold 8:20 till 9:20, and that's GMT 1. So that should cover that. So you can have two different imbalance ranges. You've got that one, and I've also got the Asian opening, which is more more of an evening. And you can see here again, there is power to these areas. We've come up, made that upper range there before moving down, and then during that particular day, we've come up, spiked into that range, and then continued to move down. Again, another range formed, spiked up, moved down. And when we're looking at these ranges, they are quite powerful, and there's more profitable ranges for the different instruments like I just mentioned. But you do have to be savvy with understanding how to trade, volume profiles and things like that. So just a few more to go through. We've got the previous daily highs, previous weekly highs and monthly and so on. We've got the premium discount zones, basically the previous lows and highs like we talked about up the top here, and then it just signals a zone to the visual representation of where you want to be entering. So if you're entering short, you want to be entering up in this area, and longs down in this area, and so on. So it's just the PD array there. Previous daily high, previous daily low, previous weekly low, and so on. So this is saving a lot of daily drawings, a lot of brain energy, and so on. Okay, so there's a few different things as well that are built into the visual side of it. We've got the pin bars. Okay, so as pin bars appear, you'll see certain colours appear. I've turned off this shape plot, so they're not going to appear. There's just too much going on. So we've got pin bar here. You can see the colour of the candles there, just a little bit green. And then we've got the engulfing candles, which again are also green and red for the opposite. And that's about it. So that covers everything for the SMC. Very, very powerful tool here that I've been working on, and hope you enjoy it.
Accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people who charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
I wondered whether there are some market tests of whether you're being heard. And I think about TLAC. So TLAC should respond to good and bad news about the institutions. And it's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. And there may be some other prices. This is similar to what Jay was saying in the market that you can tell whether people understand who's going to be protected, who isn't going to be protected. It would be, I think, an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
I'd like to go back to some of Dick's early comments. I do think it is hard to get a lot of demand for transparency right now in this sort of period of peacetime. But that is going to flip, and it's going to flip probably even faster than we saw in 2008, where the need for communications really quickly in the social media world to avoid disinformation, to have some holding patterns for things like, I remember in the early days of bail-in, people saying they're coming for my deposits, right? So just holding communications that you can pull out that are helpful to deal with disinformation, some very simple things, and how quickly you'll be able to deal with different constituencies. For example, as liabilities are further up and closer to harm's way, when are you going to be able to give them some comfort, if any? How do you deal with foreign operations? How do you communicate to some of those different groups? I think ex-ante preparation for the speed of scaling up and the ability to get information out to avoid rumors taking over the narrative strikes me as probably the place that feels like it's got the most benefit in a world where I think you've done a pretty good job of getting out the basics of Title II and some of the basic resources that are available now.